Hi, and welcome back to the fourth video in this Quickstart series on wholesale priced fixed income payments. We've been over just what these payments are and where they come from and why they're better for you. And in the last video, we looked at various different situations and customer case studies and portfolios. It's my hope that some of these stories echo with your own situation and that you're starting to visualize how these payments could really work for you. These payment streams are great for situations where you need a safe money asset to do exactly what you expect it to do, which is so unlike many other investments where you're just hoping for an outcome. With wholesale priced fixed income payments, you can get the guaranteed result that you want. Now, in this video, we're getting into the nuts and bolts of choosing a specific payment stream. We're going to look at the inventory page and discuss some of the tools and the downloads on the platform that are available to you. We'll also go through the most common questions that people have, questions about taxes, risks, and what-if scenarios. So let's get started and jump right into it. All right, welcome back on video 4 here of our Quickstart series about DCF payments, wholesale income, secondary market annuities, talking about these period certain guaranteed payments from top-rated insurance companies that come from settlement annuities, and original annuitants who receive their payments from structured settlement annuities sometimes want to sell their future payments for a discounted lump sum in a secondary market transaction. And that's what I buy on a regular basis, and my customers buy from me. They buy the right to receive these existing in-force payments from top-rated insurance companies. Why do they buy them? Well, they're higher yield than bonds, higher yield than new annuities, higher yield than CDs, lower price, lower risk of market volatility and withdrawal rate, and they insulate you from sequence of returns risk, among many other benefits. People use these in retirement income gap filling portfolios to create supplemental or rising income streams, guaranteed income for retirement or for special needs like trusts or capital replacement or private pensions. A lot of situations people don't need lifetime income, and they may have significant assets or not need to buy the insurance product known as a lifetime income annuity. And so period certain guaranteed income like what I have really forms a great cornerstone to a portfolio that offers certainty and guarantees, and makes it a really excellent planning tool for inheritance and capital needs, and as I said, special needs trusts or funding assets, a variety of situations that we touched on in the last video. Now, in this one, we're going to look at choosing payments. What are some of the terminology on the inventory page? What are our tools and documentation online? I want you to understand the rates and the calculations used in coming up with these. And I want to touch on the frequently asked questions and the what-ifs, and the big one about taxes that everyone always comes up with when investigating this. So first off, some terminology. Each of the payment streams that we have I refer to as a case. I'll sometimes call a payment stream or a deal. It's a case because it comes from a transfer of structured settlement payment rights in a court-ordered legal process. And the court approves each transaction that we acquire. It needs to be approved in a manner that's compliant with IRS and state law, and it needs to be in the best interests of the seller to sell a payment. So it's kind of a long process. Every one of the cases that I acquire is hundreds of pages of collateral material, and it might take months to get it acquired. So I have a constant pipeline of acquisitions and sales that culminate on this inventory page, which we're going to see in a minute. When cases get on there, there's a lot that's happened to them before they get to this point where they're ready for sale. Each one of these tests, like I said, takes months and requires a lot of legal work to review each file. At the end of the day of the acquisition cycle, which can be day one when it hits our inventory page, when you see it, each case is assigned in a court-ordered transfer process to a specific escrow account numbered and in each court order that assigns the payments. The numbered escrow account is at a Quickstart Trust Company, which is a trust and bank in Texas, which handles our payment servicing and escrow services. There are a couple of other roles that Quickstart plays I'll touch on in just a minute. But buyers who acquire payment streams from us have a direct and contractual relationship with Gold Star as the payment servicer and the administrator of the payment. And you can handle any address change, direct deposit, or banking changes related to heirs and beneficiaries directly with Gold Star. So you're not buying a payment stream that requires DCF Exchange or me or my company to administer it over the course of time. We set it all up at the front end to flow through Gold Star as a third-party, FDIC-insured, regulated banking and trust entity that gives a great deal of security to the transaction over the long term. Now, a lot of buyers who use qualified money also use Gold Star Trust as their IRA custodian. And I'll get into some more detail on that in a different video about how to set up your IRA if you're using qualified money. So just put a pin in that one and we'll come back to it in a bit. We're going to spend some time today looking at this inventory page where our inventory is shown online and look at some of the terminology and the information necessary to select a specific payment stream. You'll also look at the downloads that are available to you from this inventory page. So to start, we're going to see the filters and the tabs at the top of the inventory page. And what do some of these things mean? At the top of the inventory page, you'll see categories, inventory availability, sales, and payment type. And the immediate income cases are payments that start now or within a month or two, sometimes within a year. Deferred income is usually out several years. And all of our payments are going to be fixed, guaranteed, period certain payments unless they are specifically noted as insured. It's a very small percentage of my inventory. I don't have any of it now, so I don't even have one to show. Basically, just assume that everything that we have is a guaranteed, period certain payment with no change. So on the inventory page, you'll see those things I just noted, the category of immediate, deferred, and lump sum. And you can unselect. So if you only want to look at lump sum, you can look at only lump sums. And if you want to look at term from shortest to longest, you can sort and filter with these controls right here. Here's our shortest lump sum case on inventory. The payment type are all fixed right now. If you select insured, you'll see that there's a whole lot of nothing of any category because I do very little life contingent. Be aware of that if you see these payment streams elsewhere. A lot of them are life contingent payment streams that may not be as clearly disclosed. Moving on, the next tab you'll see up here is availability status. In stock means that is in stock. It's owned, paid for, everything is done, and it's ready to go. In review cases, I'll deselect in stock to only show the in review. In review cases are in legal review with our counsel. They've been court approved and have reached milestones that we know it will go forward. We're just doing some final checks, or perhaps we're waiting for documents from the carrier. There's a variety of situations why we publish things that are in review. But in review are the new cases. Sometimes they just came out today or in the last week or two. Typically in review cases are ready to close within about a week, sometimes 2 weeks, sometimes just a matter of days. In pipeline is not something I'm currently publishing for any of our categories of cases. Pipeline are deals that are, like it says, in our pipeline, our acquisition pipeline, but they have not yet been court approved, and so there's less certainty of them coming to fruition. Frankly, it's just not worth your time or mine to publish in pipeline cases until there's a higher level of certainty, because it can just not come together, or you get your hopes set on one case, and if it doesn't come together, you end up wasting a lot of time waiting for it, and it's just not worth it. So as a capitalized intermediary, I'm able to buy several $1 million of payment streams every month, and I buy in advance of my sales. So it's good for me to know what people are looking for, so I can screen what's available on the inventory and buy to suit demand. But I'm not buying only on pre-sale basis or selling things that are not yet court approved. In fact, it's just the opposite. I'm only selling things that are already approved and ready to go. And that's what in stock really means. The next tab on the inventory page is sales status. So sales status, you can see available cases that are available for resale, or you can see reserved cases that are in the final stages before they get sold. And sold cases are a selection of payment streams that we sold over, I don't know exactly how long, maybe the last year or so. It's quite a long list right now. These are all cases that went through and are sold and complete, and we just put it out there. I should probably clear that out. It probably makes loading the page slow to have that many cases out there. But that's our sold list, if you'd like to see that. I'm going to go back to available, because you'll notice on this case, we have a 48-hour hold. That's one thing that you can look out for. This is on hold for another customer. In fact, I put a hold on it because we're going to look at it a little bit later in this video as a sample case when we look at the purchase process in this and the next video that I'm going to do. But 48-hour hold just indicates that it is on hold for a customer. Moving on, there are different types of cases, both income and lump sum cases, and we can split these cases to suit your needs. Lump sums can be split to size or split certain maturities if there are multiple payments in a lump sum. Or an income stream can be split. You can buy just half of an income stream, for example, or you can split the first 10 years in your IRA and the back 10 years of a 20-year stream non-qualified. There are a lot of ways to split a case, and those splits are all administered by Quickstart Trust, who's the payment custodian and servicer. And the payments all flow into the escrow account at Quickstart, and thus can flow out to you or your clients in a variety of ways. I'm going to give a quick example of one I just did a moment ago for another customer. We had someone who wanted a maturity in 2029, and this case was on our list. I'll use the tools available to me and highlight it. This is a lump sum MetLife that I have configured with 2 lump sum payments in 29 and 34. I had a client that just wanted the 29 lump, but he only has $60,000 to invest. So using my calculator, I use these tools all the time, and you can use them too. They're right on the website. I selected the case in the calculator, and if he only wanted the full $130,000 lump sum, we could have that split. But in reality, this client actually just had $60,000 to invest. So $60,000 being the investment amount, we solve for the payout. So we can create a split of $106,594 of payout in 2034 for a price of $60,000 today. And this is the kind of split we do all the time for clients. So make sure to think creatively about how you might want to split payment streams that are on our inventory to suit your specific needs. Each of the payment streams that we have are schedules of payments that are available for download. So the documents on the inventory page are available right here when you click this More Info button. This little window pops up, and you can download the illustration, a payments table, or a reservation form of the specific case. An illustration looks like this, and it's simply a summary of the payments, the ratings of the carrier, the yield, and a schedule of annual summary of payments. Let's take a look at an income stream, and I'm going to focus on this particular case that I have on 48-hour hold, because we'll see that in other videos here in just a minute. The payments table of this case shows each of the payments that happen over the course of time, as well as on an annual basis. $1,700, $1,701 for 360 monthly payments. A beautiful 30-year income stream. Each payment is shown with principal and interest components, and I will go into some more detail on the tax aspects of this with the interest component in just a few minutes. Year-end valuation summary is also the last page of this payments table, and that's just one of the downloads available to you here. If this is the case for you, you want to acquire it, you can download a reservation form here, and it's blank as to your information, but the specifics of the case are right here: the price, rate, date, and so on. All we need for taking reservations are the full name of the purchaser, such as your name or joint tenant's name or your IRA, phone and email, and your bank account information for direct deposit. That's the information that goes to Gold Star, our payment servicing partner, and they are the ones that record the ownership in their system and make any updates to it over the course of time as you move forward. We just looked at these downloads. By clicking that green button, you can come up with this information: payments table, reservation form, and summary. And now we're going to carry on the inventory page. There's some other really, frankly, I'm quite proud of the different tools that we have. I was going to call them cool, but it's more than cool. It's pretty sophisticated. We can select multiple cases, and you can select a single case and illustrate it and customize it. We just did that example on that MetLife lump sum in 2029. We've seen how to sort and filter, and you can download the whole inventory page on PDF. So let's look at the multiple case selection. If there's a portfolio or several cases that accomplish a need for your situation, you can download these three combined, or any up to 5 that you want to see combined. In a prior video, I showed you quite a few different portfolio illustrations, and I get a lot of people who build portfolios over time. This is a way of illustrating a portfolio of a currently available product. I have some other tools in our back-end database that allow to show both active, pending, and sold cases for people who are assembling over time, or things that they bought years ago combined with new things that they want to look at now. But again, we illustrate on an annual payout basis here. So the monthly payments are summed up for a year and shown in a total and a cumulative column. And you can see how the different cases each contribute their respective portion to the total. One of the, just another one of the tools that we have available. Multiple case selection can also be customized with your name, or you can download a specific thing with your name as well, which is useful for showing people or for advisors showing their customers a specific payment stream. If you would like to look at the entire inventory in a PDF basis, that can be done right here as well by downloading right from the top of the page. We looked at multiple case selections and multiple downloads. The calculator tab on our inventory page we looked at very closely just a moment ago when doing a split. There's a couple of other nice features associated with the calculator I'll show you. You can pick all of our inventory from this drop down and look at a case. Here's the case that we have on 48-hour hold that we looked at a moment ago. Its payment stream is comprised of 360 monthly payments of $1,701. And by clicking solve, we come up with the purchase price of $284. This is an assumed closing date of July 31st. As of this date, it's actually June 18th. So if you wanted to buy this today, it's going to be, you'll notice as I changed the date, it went back to an unknown price. Click solve again, and well, look at that, it's now $282. It's $2,000 lower price. Well, that's because it's 6 weeks sooner than the assumed closing date online. We have to publish inventory online as of an assumed date, which you can see in the calculator. But when the cases get calculated and go to you in the closing book, they're going to be priced to a more exact date dependent on the specific time and method of payment when they're required. That's something we'll get into in the next video on how you purchase in video number 5. You can also use this calculator for split scenarios and what if kind of pro forma situations. What if I wanted to buy, if I wanted $5,000 a month for 20 years and I wanted it to go up 3% a year. What's it going to cost? And our current rate, you can assume about a 6% rate. All right, that's an $897,000 investment for $5,000 a month. If rates fall, as many people are expecting them to fall, solve that, and it goes up to 930,000. So price moves opposite to yield. As the yield goes down when interest rates fall, if the Fed cuts rates and long-term rates start to fall, these prices are going to start to go up. That's just a function of mathematics and how the market works. So this is a great time to get into fixed income at higher yields, because all the tea leaves and all the talking heads keep talking about when rates will start to come down from the Fed. In addition to the functions of keying in or selecting our inventory, you can load what are known as T-value files. TV5 files are files that have payment information, and some people have their own T-value calculator. If you have one, you can load and solve, and you can also save as TV files from here. And lastly, you can see some of this information on a clipboard on the calculator as well. Moving on from the calculator, another page on the inventory page, another tab, is taxes. There are 3 tax methods for calculating the taxes due on these payment streams. The payments table is our default. We also can produce an amortization schedule. You can pull that right from the calculator. And both of those things show the exclusion ratio related to a payment stream. A little detail on each of these is shown on this page here. How payments table methodology works, how the exclusion ratio or the AM schedule works. The interest component of every payment stream is fixed. It's known and guaranteed. We know exactly what you're going to get on any payment stream in terms of total payout and interest income. When you recognize that interest income for taxes is between you and your tax preparer. But in this situation, this one we've been looking at, there's $284,000 investment and $612,000 of total payout. So we have a known amount of interest income that's shown on the table, and your taxes are for you to determine with your tax advisor. This particular has a 46.4 exclusion ratio if you use that method. I'd love to talk with you about the taxes on a specific case-by-case basis. I don't give any tax advice, but I do make available the guidance that we've received from tax professionals and the information necessary for you to do your own taxes. No 1099s are issued on these payment streams, but that certainly does not mean they are tax-free. So go ahead and read up on the tax information here on this page, and let me know if you have any specific questions. One of the other tabs on the inventory page are downloads, and these downloads are flyers, an executive summary, comparison handouts, benefits, beneficiary information, and white papers. There's a lot of really valuable information here in the downloads section, which you can grab with any of these just by clicking on the link. So there's flyers and illustrations that hopefully help make these make sense for your situation. So to get into some of the FAQs, the frequently asked questions, if I didn't touch on them already in this video, let's address some of them right now. One of the big ones I get is, what if you go bankrupt? What if you get hit by a bus? And while never pleasant to think about that bus, I've always tried to make the business planning keep that in mind, so that my customers and myself and my own family all know that things are taken care of. My needs are aligned with yours in that situation if that bus comes to meet me upside the head. So if DCF goes bankrupt or closes down, we never own any of the payment streams after they're sold to you. You own them. So if I'm gone, if the DCF business is gone, the payments will continue to flow uninterrupted. That's exactly why things are set up in the escrow environment with Gold Star Trust Company in the way they are, so that they flow uninterrupted to you. If an insurance company goes bankrupt, what happens? Well, I'll never say never, but this is a highly unlikely scenario just due to the rules, the reserves, the cash reserves, and the credit quality of the insurance companies we deal with. If an insurance company were to go into receivership, it takes a long time to wind down these assets, and typically blocks of assets are sold to other insurance companies and business continues on. Secondary market structured settlement payments rights and payees may be treated differently than primary issue settlement payments in a wind down procedure, but frankly, there's no case out there where these have gone through a receivership, so we just simply don't know. If the uncertainty of an insurance company bankruptcy is something of great concern to you, then these may not be the right payment stream for you. Carrying on with what ifs, bad things happen, or frequently asked questions. What if Gold Star goes bankrupt or closes down? Well, Gold Star is a federally regulated bank and trust company. It's a trust company owned by a large bank. And so if the trust company were to go out of business, its assets would be sold to another bank or trust company. And the payment servicing department, which we deal with primarily in our business here, they are regulated trust companies. So they have high levels of bonding, federal oversight, Texas Banking Commission oversight. They don't own any of the payments. You do. I don't own them. Gold Star doesn't own them, but you do. So those are regulated by hundreds of years of U.S. law related to trust companies. And so should Gold Star close down, another company would be taking over that payment servicing responsibility. All cash and deposits at Gold Star, because they are owned by a bank, are FDIC insured and licensed and bonded and regulated. So we've created a high level of security for customers by partnering with Gold Star as the payment administrator and as the payment servicer here. Gold Star's fees are really nominal. I pay their setup fees with every transaction. That's not passed on to customers. But what is part of your acquisition is a $5 per payment fee that is assessed on the payment when it is received in the future. So a $1,000 monthly payment will be a net $995 to you when it comes in. Gold Star may raise those servicing fees in the future, but only on new accounts. I have a contractual relationship with them now where they will not raise their fees on any existing accounts that are opened. So you can rest assured that they're not going to jack their fees on you in the future. Other questions I get are, what if the seller of a payment dies? You might have seen me on that inventory page talking briefly about insured cases. I do almost no life contingent payment business. There are life contingent payment streams in this industry and in this market. I personally just don't handle very much of it. All the payments that we deal with are guaranteed and period certain, and when they are sold in a court-ordered transaction, they're forever severed from the seller's estate when they're assigned over to you. So the payments continue regardless of the seller's life. If the sellers change their mind, they can't really get it back. Transfer orders are non-appealable and final. The only reversals in this space have been cases of fraud or criminal situations, which I've never had any, and I've done thousands of these cases. And there's always risk in every transaction in every industry. Bernie Madoff is a prime example in the securities business. Unfortunately, there are bad actors everywhere. But our legal process has extensive protections and procedures in place to protect against all forms of risk. Moving on to some of the other questions that folks typically have. What about beneficiaries and heirs? So we sell guaranteed period certain payments that pay to the purchaser or to their heirs. Heirs receive their payments from the decedent. If you were to pass away and pass this on to your kids, for example, your kids would work with Gold Star and simply present a will and a death certificate, and Gold Star re-registers the ownership of the payment stream in your kid's name if they are your heirs in your will. Many folks will buy in the name of themselves and a spouse, so the continuation is by joint tenants with right of survivorship, or JTWROS. Other folks buy in the name of a trust, so the payments will pay to the trust regardless of who the trust beneficiaries are or the trustees. Those are the typical ways non-qualified customers deal with heirs. Beneficiaries are stipulated in an IRA account for our qualified customers, folks who buy in the name of an IRA. That beneficiary is named at the IRA custodian, and I try and get all my customers to utilize Gold Star Trust. They are the lowest cost IRA custodian available. We spent a fair amount of time touching on taxes earlier on in this video. You and your tax advisor will select the method that's best for you. You can find some more information on that tax page on the inventory itself. And I'd be happy to speak directly with you and your tax advisors if there are further questions on that. Another question that I get frequently is, what about liquidity? What do I do if I need to get out or sell my payments? I routinely buy back from people or from their heirs if situations change or they no longer want a payment stream. There isn't a surrender schedule on these payment streams, but they are easily transferred. There's no restriction on it. You can give them to your kids, you can give them to your church, you can give them to your friends, or you can sell them back. There's no restriction on them, but there is a very easy process with Quickstart Trust to register the ownership with a new customer. And I'm always available to make a market in this. The market is always determined by interest rates that are external forces, so I can't put a specific surrender schedule or price on a payment stream until we know the date at which you may want to sell it. But you or your heirs can always just contact DCF and get a price for selling back or getting a payment stream liquidated. In the next video, we're going to get into the details of what's in a closing book, the policies, assignment, paperwork, and other documentation. And we'll talk a little bit about what Quickstart does during the course of a payment stream and the life cycle. So those are frequent questions, but I'm going to put a pin in them for now, as this has already run long. And we're going to move on to the next video in just a sec. I hope this helps you start to get some clarity. You've seen this slide before if you've worked on a few of these other videos, thinking about what goals you have and how the payment streams we have can fit into your situation. These aren't for everyone, as I've said a few times before. They're higher yield fixed income, but they're not particularly well known. So I hope these videos are helping you do some of your due diligence. We're going to look at the paperwork of a specific transfer here in the next video, which might be just what you need to help you decide if you want a higher yield, safe income investment with a period certain financial outcome. Well, that's what we do. They lower portfolio risk. You can mitigate sequence of return risk and market volatility in your portfolio, and in many cases get more overall financial output. So the next video we'll get into the specifics of reserving a case, opening up IRA accounts, and what exactly you'll see in the purchase process when you get documents by DocuSign and send funds into Quickstart for escrow transactions. Thanks again for your time. This was Nathaniel from DCF Exchange, talking about our period certain payment streams that we sell in a streamlined purchase process here through DCF Exchange and through a couple of different websites, which I've shown you today for IRA and non-IRA customers. Got over 800 customers over the years, over almost 2,100 files sold, probably over 2,100 now, and at last count, $430 million of future payments with no one ever losing a penny. Thanks for your time. I look forward to speaking with you soon. I hope by now you have a really clear understanding of our inventory page and the documents available to you, and how to go about selecting individual cases or selecting multiple cases and generating combined illustrations. We also checked out the downloads available, and we looked at the calculator online. I hope also that the frequently asked questions answered some of your concerns. If I missed anything though, let me know, and I'll be sure to make an update to this video or put more answers online for future downloads. I want to make sure you have all the info to move forward with total confidence. In the next video, we're going to look at the specifics of a transaction. We'll look at an actual closing book, which is sent to you by DocuSign, and we'll review all the documentation that you can expect to see in a transaction process, so there are no surprises. So head over to the next video, and I'll see you there. So to get started, contact your advisor today, and we look forward to working with you.